Half hour away from the opens in Hong Kong, Shenzhen, and Shanghai. You're watching the China Show. I'm Yvonne Man with Annabelle Jewelers.
Our top stories. Asian stocks mixed this morning. Oil is under pressure and Chinese equities in focus after industrial profits surged in August amid signs that policies to address overcapacity in the economy are bearing fruit.
We're watching EV makers, automakers in China potentially may need permits now to export their EVs from next year as Beijing moves to tighten management of the world's largest car market.
Also ahead, how New World's troubles have become a cautionary tale for Hong Kong's tycoons and their heirs.
Plus, we're going to dig deep into China's soft power with author Siew Ting Foo and whether this trend can last.
Well, happy Monday. We are coming into the morning session today with stocks looking a little bit mixed. So, of course, you can see here the Nikkei is really the outlier, down 1% so far. But actually, across the board, other markets, you are moving a bit higher. Overall, the gauge, though, is a little bit in the red. So the sort of narrative here is, yes, you've got Japan under pressure, but it does seem like some of the gains we saw from US close on Friday could be passing through today as well. So a lot of that was really reinforced by that PCE data that told us still that expectation is there. The Fed will continue its easing trajectory as that PCE data came mostly in line with expectations. What else we're tracking is very much what we're seeing in oil markets today, because we have seen it sliding today. There is some sources-based information we have around the upcoming OPEC Plus meeting. Perhaps they could be looking at a bigger than expected supply increase. There's already one on the way for October, but there could be an even bigger one that they could be mulling for November as well. Overall as well, what else we're tracking today is really just what's going to be a pretty busy week ahead. You've got a looming US government shutdown, US jobs data as well, Tankan survey in Japan. I mean, there's really a lot for investors to keep a handle on, plus some rate decisions, PMI data on the way. But let's take a look at this terminal chart as well, because we're going to be focusing very closely on what happens in China markets today. Because yes, we did see that Golden Dragon Index in the US dipping to end the week, but we're hearing more and more investors that are coming back into this market. Is China now sort of shedding its uninvestable tag that was talked about going back to 2021? But you see this terminal chart here, taking a look at the iShares China-focused ETF. That is the line that is moving here in white, and you are just seeing those flows into it continuing to increase at the expense of EM markets ex-China, so it's corresponding iShares ETF as well. So we'll leave that there, get more on that in just a moment. But looking into the open as well today, what we're seeing in futures here, again, just some modest gains expected, but you do have a couple of things to track. Firstly, you had that industrial profits rebound over the weekend, so that's obviously a sign of optimism, but you are coming up against that PMI data as well later this week that could show that further contraction we're seeing in the third quarter, Yvonne.
Yeah, that could be the big test here, especially we're just 2 days away from the Golden Week holiday, so we're going to see if there's any signs emerging here in terms of domestic demand coming back in a big way. It brings us to the agenda here today and what to watch. So HSI has been seeing a bit of a pullback. Chinex, though, take a look at those. The small caps continue to be on that win streak here as we can track this whole AI theme. So we're seeing 8 weeks of gains there, which is the longest streak since 2015 for that benchmark there. Auto stocks, we talk about what we heard when it comes to export licenses and the like there. We did see the likes of Li Auto really fall in the U.S. session on Friday as well. On the back of that news, we talk about oil, certainly again what we've seen with OPEC Plus. New World Development earnings came out, which was pretty bad. We're going to talk a little more about that here. Second year of losses for the developer, and that renminbi fix in focus here today. But yes, it brings to mind the data, right? You mentioned about this surprise jump in the industrial profits. We didn't think it was going to be 20% gains.
Yes.
You got to wonder, is it just base effects that we're talking about, or really signs of this whole anti-involution campaign really bearing fruit now?
Yeah, well, that actually was one of the factors that was cited even by government officials. Yes, there is a sort of low baseline effect, but they're also looking at macroeconomic policies.
Yeah.
Are they starting to see this curve of anti-involution actually starting to take effect, more unified or a more advanced unified national market as well? Another factor that was cited. But you take a look, I mean, on the month, yeah, huge recovery there. And then when you take a look across the course of the year, I mean, you're still seeing gains, and it was a contraction that was expected as well.
Right. And BE has an interesting call on all this, right? They said, look, it's encouraging that we're seeing these numbers, and it was a surprise to them as well. The headline numbers look good, but then again, looking ahead, it was material prices, low year base effect that probably supported it. But you have to talk about demand, right? Is the demand picture looking better? They're saying that might still be absent. So durable industrial recovery needs to be driven by recovery in aggregate demand that they still haven't quite seen just yet. So I think, this brings the whole PMI discussion, as you mentioned, also brings the Golden Week holiday numbers that would come out at the end of this 8-day holiday. I think will be ever more important this time.
Yeah, because you really need to see what is that domestic consumer looking like in China, and are you actually starting to see, to your point, that demand coming back in a sustained way. But let's get more on this now, bring in Gareth Nicholson. He's CIO and Head of Discretionary Portfolio Management at Nomura. So, Gareth, put it in perspective for us. You would have seen the data as well, and how does that track against your expectations around PMI, your expectations for the Golden Week holiday as well?
Well, yeah, morning, and thank you. I think, for us, China, and you highlighted early on, the idea that it was ever uninvestable was never really on our radar. But for a long time, we have to admit, it was a tactical trade, a trade where you were willing to give up some of the upside to ensure that you had capital protection, that you were able to play it tactically, you had liquidity. But I think that is changing now. The data is coming through stronger. We are seeing positive signs of fiscal stimulus coming through to the system. PMI is going to be interesting. I honestly feel Golden Week data around travel and retail will probably be more telling. Those numbers are going to give a real feel for, are we seeing Chinese buy Chinese stocks? Are we seeing Chinese spend their money again? And that is a real key element for international investors to start shifting long-term money back into China. When you start seeing the local base buy, that creates a floor, that creates a real stickiness that investors like. And I think we're starting to see the signs of that. And that's why I think you're seeing more asset managers start committing to longer term allocation to China once again, instead of more the tactical play where we're looking for a measured upside. So exciting space.
Yeah, you mentioned this industrial profit number maybe injecting some life back into equities, but you still call it a fragile risk-on story. What still makes it fragile, Gareth?
Well, if we do see retail and travel disappoint, and we do see PMI trend moving down negative, there is this disinflation fear that's still there. Fiscal stimulus has been slow and steady, and maybe that is the right way. We've seen in the past in other economies the huge bazooka effects to try and get the economy going at full speed. Chinese government's not doing that. So there is still a potential of the disinflation fear to come in, and we have the turnaround. So it is still relatively early to the long term. This is a shift for, if you would call, long-only money, for real money, for the kind of sticky insurance money to start shifting back to China. I think the fast money's been doing it for a while. The tactical money is there, and it's been a great trade. But we need to see a little bit more macroeconomic strength to see a huge trend, and that's when we're going to have the longer term rally. So it's at that pivot point. Everyone's going to be keeping a very close eye on this week. There's a lot of tailwind. We're supportive. We think it's going to be in the right direction, but we'll have to wait and see.
A lot of the strength of the rally as well has been predicated on this assumption that China's really moving ahead on the global stage when it comes to AI, and their economy maybe has been withstanding a little bit better than expected the pressures from the US as well. So is that where you're putting your money, though, into that AI trade, and which aspect of it as well are you looking at?
Well, I think if we talk about the AI trade, and we can chat about the US in a sec, but we are seeing the opportunity in the US is a grind higher. It's not an easy trade. It's already starting to expand into other, names beyond the Mag 7. So people are looking for other opportunities in the space. The idea of diversifying out of the US, given most investors have a large overweight to the US, is attractive. Where do you go? In Asia, India is struggling at the moment from an investment perspective. Japan has still uncertainties around the currency and the outlook of the rates. China becomes interesting, and you don't need a big shift from the amount of money that's in the AI story in the US to move the needle in China. Plus, you have some of the money from India moving back into China. So I think following the flow has been very interesting. We think that's going to be the main tide to see this next catalyst of change, this next shift upwards. Where in the China in particular, we still prefer sectors that are of government strategic value. So it's the resilient sectors. It's tech resilience, it's defense resilience, it's energy resilience, it's food resilience. These are sectors the government's clearly made a priority. They're supporting it, and I think companies in that space will continue to benefit from a nice tailwind.
Gareth, you talked about there's so many different types of ways to play it now in AI. We talk about the Mag 7, and really it's broadened out beyond that when you want to look for opportunities in AI. It's the Oracles, it's the Broadcoms of the world now. In China as well, right? You have to look a bit more granular beyond just the Alibabas of the world. I mean, that certainly still is the darling trade, but you really have to look very granular into this whole supply chain in terms of the themes right now.
Yeah, I mean, I think to be honest, in the US, you have to really, fine-tooth comb. We're looking at private credit into enterprise software. You're looking at private infrastructure, private equity in different spaces, VC. There's so many different vehicles to really get into the sector, into the industry. As we know in the US, public markets versus private markets. Private markets is a huge component, and public markets is there is just so much focus there. It's very difficult to find alpha. When it comes to China, I think the alpha opportunity is still stronger. Yes, the very big names are very well watched and very well covered, and it's difficult to see an clear opportunity. So you need to go slightly broader. Sure. But I don't think anywhere near the US, where the US people are looking far and wide to find value in the sector. In China, I still think there is opportunity in tier 2. You don't need to be going to 4 and 5.
Gareth, hold that thought. We'll have more from Gareth Nicholson, their CIO and head of discretionary portfolio management at Nomura. And still ahead, we're going to talk about New World Development reporting a second straight year of losses, and we take a close look how the developers' troubles have become a cautionary tale for the city's tycoons and their heirs. And we're counting down the opens of trade in Shanghai, Shenzhen, and Hong Kong on this Monday morning. This is The China Show.
All right, we are 15 minutes away from the market open this morning, and again, just continuing to see these expectations. We'll see a bit of a pop at the open. We did have strong industrial profits figures over the weekend, so that's sort of a nice tailwind rather coming into the session today. But we are coming up against PMI data, for instance. That's going to be one of the primary things to track this week, and you could see that data just continuing to show that slowing in the third quarter. Otherwise, it's a pretty busy week ahead, really. I mean, especially when you've got Golden Week holiday coming up amongst a lot of the Asian region here, but you've got an RBA decision, for instance. They're expected to stay steady. RBI as well. They could be looking to cut their rates. Plus, you've got that all-important Xi Gold debut this week. That was actually supposed to be last week, but it was delayed due to the typhoon.
Yeah, so we're set to take a look at that, right? But certainly it's interesting when you take a look at Xi mining. That stock in Hong Kong has basically been trading at a premium.
On a tear.
Leading up to this IPO of course, the international sort of side of things. So certainly that's one thing to watch. I think the biggest thing probably among some of the bond traders is this U.S. jobs report, right?
Yeah.
And whether we see anything there that can change market expectations. Still with us is Gareth Nicholson, CIO and head of discretionary portfolio management at Nomura. Gareth, yeah, I think one question is whether this government shutdown, can they avoid it so that we actually see these jobs numbers? But in particular for the bond market, I mean, is there anything that you think in this print that could change what's already been near guaranteed pricing that we might actually see a Fed rate cut in October? Do you think anything could change that view?
Well, I think if we don't get the data report, that could change the view. So to your point, if the shutdown, 11:59, there is no negotiation, and the BLS non-essential closure of functionality, which includes the payroll report not coming out. If this happens, I think traders hate that. They hate the uncertainty. Labor market is a huge indicator of where risk is going to go. Now, this is definitely not our base case, but with many things in geopolitics this year, the base case has turned out to be off. So we're keeping a very close eye onto 30 September to see how that plays out. Get past that, non-farm payrolls, we don't expect a big surprise. We expect actually a relatively weak labor is a fuel for the rally. That will continue to put pressure on the front end to come down. We expect rate cut in October and December and a few more next year. This is a little bit more than an insurance cut. There is weakness forming, but the market is seeing through that, but the economy is struggling a little bit. So from a labor perspective, slightly weaker labor, fuel for the rally, and we think this will, again, 100% price in the October rate cut, which is our base case.
And against that backdrop, you've continued to see the rally in metals, in precious metals in particular. I mean, gold's continued to rally, but you're looking at silver in particular.
Well, for us, gold was one of those good/lucky calls. We like gold for the last 8-9 months. We like gold miners. That has done fantastically well. We still feel the rally is strong there for the reasons that this is a diversifier. This is something central banks will continue to buy on the dip. This is something that a lot of investors are really seeing the momentum and carrying on buying now. Silver, to a lesser extent, is also getting a similar shine. It has different industrial values. It also is seen as some sort of store of value, and it has lagged this tremendous rally in gold. So we expect it to be an interesting opportunity for investors that are looking to diversify out of their traditional bonds and equities. When they're looking for real resilience, they need to look at alternatives, and alternatives include private, they include hedge funds, they also include commodities. And our top commodity picks at the moment would be gold and silver. So yeah, it's something that we think from a technical, from a valuation perspective is interesting.
Gareth, we've also been talking about the dollar moves and this reversal in the dollar of late, right? And it seems like the dollar has been negatively correlated with risky assets for much of this year. Do you see any signs of change there when it comes to the direction of the dollar?
Well, this one I may be slightly off consensus. If you look at many of the large newspaper providers, they're suggesting that most houses are continuing to see a strong weakness in the dollar from here. For me, if we're going to get a weak dollar, we need to see strength going to something else. And the few biggest areas there would be the euro, would be sterling, would be the Swissy, would be the yen. And I don't see major strength out of those currencies to offset a major weakness in the dollar. So actually at these levels, with the Fed likely to cut twice this year, I can see a sideways move to a slightly higher dollar value from here. It's tactical. There's not a super high conviction, but I don't think the move in the currency is going to offset, for instance, buying US equities. I do think that the dollar is going to be more of a sideways move for the rest of the year, given front-end rates are going to be coming down. And it's already pretty low, pretty near the historical lows, or the recent historical lows, the DXY.
What does that mean then for the Japanese yen and the trading from here?
So Japanese yen, I think the story will become a lot more domestic focused. So the Tankan survey will really give us an indication of what is happening on the ground. This is the last box to tick for the big pivot for the rate hike out of the BOJ. We expect an October hike. We've been calling this for some time. That will start this chain where people will see, okay, rates are going up. There will be a transfer of money from abroad coming back into Japan. Yes, that will put pressure on the dollar, but I think it's going to be more a case of putting strength to the yen. We expect a 140 by the end of the year. That is our house views. So some way from here, from an interventionist perspective, I think everyone has put the line on about 150. I think that could be pushed around a bit, given still some time between now and the BOJ rate hike. But really, we see further strengthening in the yen, given the central bank's action, given the relatively strong economy, given where inflation is going for the rest of the year.
Okay, I was watching, I think we've gone through almost all 10 of your market battlegrounds to watch this week. I think the last one is really the RBA. Why is the RBA important this week, Gareth?
I was, to be 100% honest, I could have stopped at 10 battlegrounds, 9 battlegrounds. But the 10th one is interesting to see where the RBA is going. They have in the past been a bit of a front runner, either starting to hike before the rest or cutting before. So it's interesting to see how they're gauging. Australian economy is obviously very strong, has been historically, so they can kind of run at their own speed. But we don't expect much action from the RBA. It's going to be more just of a guidance than an actual action. But we're looking forward to see where the guidance is going to come from the RBA and see if there's any surprises there. In a market where things are, continuing to grind higher, market is strong, risk is on. From an investment perspective, you really want to look at if there's any signals that are going to give you an indication of, okay, this is the time to act. At the moment, it's hold on. Keep riding, but be very careful when you need to, to shift to gear.
Gareth, yeah, thank you so much. We went through everything, but thank you so much for joining us. Gareth Nicholson, CIO and Head of Discretionary Portfolio Management at Nomura. In terms of your pre-market here right now, looks like Hang Seng looks to be set for a pretty decent open here today. We're up about 0.75%. Your reference rate just crossing there 710.89 as well. You are seeing some strength in the currency too. We're at 713 levels for $1 China. We have plenty more ahead, including your analyst actions. Alibaba certainly in focus once again.
You're watching the China Show. We are 5 minutes away from the open this morning, and you're continuing to see in futures here just incremental gains. So it's looking like, again, we're going to see a pretty solid open to start the week here today.
Yeah, it looks like Alibaba could be front and center once again. We have an analyst upgrade when it comes to Morgan Stanley, really raising their price target for the ADRs by some 20% or more. And they really are talking about this whole cloud outlook here, higher cloud growth estimates. And really, this is after that whole Apsara conference.
Yeah, that was last week. And then the company, of course, outlined what's going to be a very ambitious expansion of their overall AI budget. They didn't put a dollar figure on it, but we know already $50 billion is planned for investment. Yeah. So just continuing to scale that higher. Yeah, this whole analogy of a full stack, right? That certainly is what the market is really kind of getting very optimistic about. So that price target for the ADR is lifted to 200 from 165. They still remain overweight on the stock. You're seeing when it comes to Hong Kong listed shares, they're just slightly to the upside here this morning. In terms of other stocks we're watching is New World. Those earnings came out on Friday after markets closed. And yes, second year of losses. There you go. We're down 2.5%. A lot of the analysts say, rising leverage by asset write-downs is something that they're watching out for as well. So they might continue to suffer loss, according to some analysts out there as well. Tencent is interesting in the AI story. They're releasing an open source AI image generation model. Not sure what I just read there, Belle. But maybe you can give us some more. It's essentially a chat tool that can create an image for you instead of creating text. So you have text-based models, AI image generation, but you sort of see that trend here of what would be considered a multimodal approach to AI. So you can spit out text, audio, interpret video. It's a lot more than just to have a simple chatbot, essentially.
There's all those AI pictures that I get sometimes, and I wonder if they're real or not.
Well, they're fake. They're fake. If you read the comments, they're fake.
Yeah. Sometimes I really have to question what I see on my social media feed. Heidi Lau, Yum China, of course, we've been talking about when it comes to Golden Week and what we're expecting in terms of, rides and trips and all that here. We're talking about food safety first, unveiling food safety rules for chain restaurants. That is impacting some of these names as well, but certainly they're talking about 2.3 billion trips being made during that 8-day holiday. Certainly one to watch. Auto sector also one to watch here, given what we heard from regulators, tightening export rules with permits. We got the open coming up next. This is Bloomberg.
Welcome back. You're watching the China Show, and we're counting down to the open of markets this morning. One of the best read stories so far on the terminal today is this one. China's markets shed uninvestable tag as global funds return. And that is sort of one of the key themes they're watching. Global investors becoming more bullish on Chinese equities once again. Yeah, and I think there's some reason this time to see that things could extend, given what we saw with those industrial profit numbers there, where basically that surprise jump of 20% certainly does lift at least. Maybe the data is starting to look a little bit better. Right, that was one of the things that was missing in this rally. In some ways, you are starting to see at least policy helping there in terms of repairing industrial sector and the like. Anti-involution seems to be working as well. So maybe that's enough. But the demand picture is still the key question mark, right? And we'll see if the Golden Week numbers that come out in terms of trips and the like is going to help with that. In terms of what we're seeing in the markets here, onshore markets are slightly to the upside here as well. As we talk about MSCI China, we're set for a 5th month of gains as we wrap up, of course, the trading month. We're on one of the longest winning streaks when it comes to the Chinex as well. 8 weeks of gains that we saw rack up last week as well. So that's the longest winning streak we've seen since 2015. Chinese 10-year and
30-year bond yields have been tracking that as well. We're coming off a little bit now, but we're basically still hovering around the highest level since this year of 2025. So certainly that's still one to watch, this slight melt up in the bond market yields picture. Crude is slightly to the upside here, following what we're seeing when it comes to Brent prices here, this report and signs that maybe OPEC Plus may be looking into actually increasing output here. But then again, oil prices are actually down. Shanghai crude is to the upside. Watching Capricorn, that's the one that's actually down 1% here right now. Take a look at CATL A shares. That continues to be an up arrow story. We're up close to 2% for CATL now, all really on this whole ESS energy storage demand picture. They seem to think, a lot of analysts seem to think that's the next thing to watch when it comes to the battery sector. What we're watching in Hong Kong, obviously we'll talk about this, the winning streak in MSCI China. That's certainly one thing to watch here. We're seeing gains of, 0.7%. HS Tech is up 1%. Alibaba, there you go, upgrade from Morgan Stanley in terms of the price target. That certainly is helping. We're up 2% for the Hong Kong listed shares. The analyst upgrade was for the ADRs, but still enough to give a bit more momentum behind this. Baidu, as well as Meituan, there you go, we're up 1.6%. Xiaomi as well doing very well. So certainly there's a lot to look ahead to. 8 shares are doing quite well. We're watching EV stocks, though, right, Val? We were talking about the government tightening these EV export rules. So you have to get a permit now if you are looking to ship, overseas. A lot of questions, though, still. What does this mean for some of these Western sort of automakers that do make cars in China? That certainly is one thing that we're tracking. Can we see how the EV stocks are doing? Because on Friday, after that news came out, we saw the ADRs in the U.S., like Li Auto, basically fall quite a bit here. It's a mixed picture right now, but XPeng, NIO are down. Chery Auto, BYD are up right now. Oil stocks, as we talk about, right? So oil prices are down. Concerns that maybe OPEC Plus might be actually here to raise their output. There you go. Oil stocks also a bit mixed here this morning, too.
Yeah, but as you said, it's largely an up arrow story we're seeing so far with Chinese markets, and it takes us back into that story that's doing so well today about Chinese markets shedding their uninvestable tax. Let's get more with one of the lead reporters on this. Winnie Xu joins us here. So, Winnie, just talk us through, I guess, the catalyst for this trend, but also the way that it's being expressed, because there are a few different ways.
Yeah, exactly. So I think it's just a very exciting moment. We were hearing that China was uninvestable back in 2021, and finally things are turning around, right? And we've got sell-side notes coming through in the past few weeks or months saying that, for example, from Morgan Stanley, that the Asia long-only funds are turning more overweight on China, and also Goldman Sachs saying that they're seeing the most activity around hedge funds for Chinese equities in August, and that's the first since many years. But this time around, very interestingly, we're also seeing that official data is showing that kind of trend. We saw from PBOC's data that the foreign fund flows are rising across assets, whether it's equities, bonds, loans, deposits, and that's the first time since 2021. So these, the data from the PBOC and also from foreign funds really pointing to that trend starting to unwind.
And how sustainable will this trend be?
Yeah, for now, I think most likely it would be sustainable because there are those different factors that are supporting, whether it's that AI theme that's still there, the low valuation, and kind of just divergence away from the U.S. assets, right? We've got the lower U.S. dollar because the Fed cut, but that also supports the stronger yuan, and we saw the strongest yuan since November or so, and that positive cycle between the yuan and equities likely to go into attracting more foreign funds to come through. But I guess one caution is around kind of the appetite for the global long-only funds, because U.S. investors, especially the pension funds, they are still quite worried about this geopolitical tensions between U.S. and China, so still a bit cautious and a bit underweight there.
Yeah, just get more into the risks on that. How big are those risks? Because we have seen geopolitical risks, for a long time, and investors do just sort of periodically get concerned, but then shrug them off.
Yeah, it is a tricky topic right now, isn't it? Because overall, yes, we've seen investors shrugging off those risks, and seems like there is some warm up in the relationship between U.S. and China, but then we also saw the recent tariffs around the pharmaceutical companies. So it's still a little bit hard for investors to kind of predict what kind of big tariff that might come, and if that might going to hit the pharma companies or if that might actually affect the chip makers. So those are still that big concern or uncertainty that might be affecting markets. But we recently did an interesting survey for investors, and we are hearing from the Chinese investors that they also expect that foreign funds are going to be the biggest catalyst for Chinese equities towards year end.
Okay, we were talking about the AI trade. Certainly that's been leading this whole rally. I mean, Alibaba certainly is the household name, but, there's also a lot of other stocks that are rallying, a lot, right?
Yes.
I need to get very, very specific, like, what's it called? Optical transceivers. Tell us a little bit more about those.
Yes, it's really interesting, right? Because the top three stocks that have been rising and triple gains this year are actually these optical transceivers, and they are essential when it comes to kind of in the chip making process and kind of moving the signals across different chips. So I think the interesting part is that we are finally seeing that optimism going from just chip makers to the other supply chains. The other day we were hearing that the investors are quite optimistic about the cooling system because that's also going to be used in these in this chip makers the manufacturing process. And with that additional order coming through from the data centers and with the AI optimism. And interestingly, this time, it's because it's not just the optimism for the Chinese AI theme, it's also the global tech theme, right? These companies actually get a lot of revenue from the Mega 7 companies as well. So both sides of the demand rising to support these stocks.
Yeah, so Zhongzhi, Etolink, and Suzhou TFC. Yeah, certainly a mouthful there. But yeah, certainly one to look ahead to. Winnie Xu, our Asia equities reporter there, on all things China here this morning. We talk about the EV sector. Certainly that's the one thing to watch, where automakers now will need permits to export EVs starting next year. And adding to signs that officials are tightening control over the world's largest car maker. It's interesting we're not seeing a very strong sort of reaction to it right now, but given it's interesting, right? Because, I mean, this is the very industry that China's trying to promote. Why are they limiting it?
I actually find it really fascinating, and I think it's sort of, I guess, a maturation of the industry as well. What China wants is healthy development.
Yeah.
And so this is a way to also curb anti-involution. I mean, they just want to have permits so that essentially they know how many EVs are going abroad. We already see permits in place for other types of cars. You see them for motorbikes as well. So, I mean, we know there's been intense competitive pressures in the EV industry. This is maybe one way they're trying to bring that a little bit under control. Yeah, maybe ease some of the geopolitical tensions, particularly when it comes to the EU, which has already imposed some hefty tariffs to stem the flow of some of these Chinese exports, right? So that's one thing to watch. Let's take a look at when it comes to New World, right? This one continues to be a very down arrow story here. We're now seeing losses of about 7%. After reporting a second year of losses for the developer here. And obviously, it's one of our big takes this morning is really about the whole Cheng family and where are they going to move from here. But yes, analysts are saying more downside to come, really, when it comes to the financial side of things. Yeah, absolutely. It's really a fascinating story. We've got a New World this morning, and as you said, the Cheng family. But really struggling with more than 200 billion Hong Kong dollars in liabilities, and a lot of that really tied to the 11 Skies project. Really fascinating insights on Adrian Chen and the personality around him as well, and maybe how some people were just afraid to say no, and maybe that's not such a great idea to build a mega mall right next to the airport. Yeah, and the great piece from Shauna and her team is basically, is this the cautionary tale for all these other tycoons as they go through succession plans, transitions, and the like here for the next generation. Yeah, so that's certainly one to watch for New World here as well. We'll continue to check how the rest of these markets are doing. Looks pretty good right now, plenty more ahead. This is Bloomberg. Continue to watch Hong Kong developer New World here after posting a second straight year of losses. We just talked about the stock down some 8% here right now as it continues to struggle from a weak property market and debt pressures. Losses top $2 billion, as we just told you there, really capping another challenging year, even as the firm tries to ease
a cash crunch.
Yeah, that's actually the topic of today's Big Take. It's looking at New World's troubles, how it's also become a cautionary tale perhaps for the city's other tycoons and their heirs. Let's bring in our Hong Kong real estate reporter, Shauna Kwan, who joins us now. So, Shauna, really great reporting.
Thanks.
I think we can just start off, though, with the results that we got on Friday and what exactly we learned further about the company's troubles.
Yeah. So I think what we learned is that the crisis continues. It records another year of loss of over $2 billion. I think it goes to show that the Chang family, the billionaire clan behind New World, has to find solutions for the developer. So, for example, exploring capital injection with third-party investors that we reported.
Yeah, certainly that's one part of the story. But then your Big Take really talks about the empire and how troubled it is. But what does it tell you about how are other tycoons looking at this situation? What can they learn from it?
Yeah, so I think, from the story we published today, we explore what kind of, lessons the New World saga tells us about the current situation faced by the local, tycoon families in Hong Kong. Because the real estate industry looks very different from what their founders encountered decades ago. So analysts say that there's just more pressure on the next-gen leaders to innovate. And there's also the issue of inheriting a business model that might not fit into today's world. We have seen a slump in property prices for a few years, and there are just no signs that we will go back to the peak anytime soon. So I think the new generation of leaders really have to find new ways out.
It is challenging, though, because Adrian Cheng is someone who tried something different, is still trying to do things differently. So what does that tell you then about the future of other tycoon families that face those challenges with a slowing property sector or sluggish property sector and do need to also innovate?
Yeah, that's a very good question. From the looks of it, I think they're still sticking to what they do best, that is real estate. But I wouldn't be surprised if they, venture into other new industries like tech, in order to diversify their businesses.
Yeah, I mean, Adrian Chen has been doing that too with that latest announcement as well. Tell us more about that.
Yeah, exactly. I mean, looks like he's moved on from real estate. He's looking into, digital assets and then building his cultural empire. So I'll be very curious to see, what, new ventures he takes on.
Yeah, as he posted on Threads, right? I am my own light. Nothing could diminish it. Shauna, great reporting. Thank you so much for bringing that story to us. Of course, you can have more on that Big Take from Shauna Khan, our real estate reporter. It's on the terminal, also on Bloomberg.com. Plenty more ahead. This is Bloomberg.
It's looking like we have a deal on Gaza, and we'll let you know. I think it's a deal that will get the hostages back. It's going to be a deal that will end the war. It's going to be a deal it's going to be peace.
Well, that was President Trump there suggesting there might be a potential deal to end the fighting in Gaza. He's set to meet with Israeli Prime Minister Benjamin Netanyahu later on Monday, and that would be the fourth meeting since he took office. Well, Egypt's foreign minister says Arab states are in full support of President Trump's push to end the Israel-Hamas war in Gaza. Speaking to Bloomberg, Badi Abdulati also told us about the outcome of last week's meeting between Trump and officials from Arab and Muslim majority states.
It was a very, very encouraging meeting. It was positive, to hear from President Trump his commitment as a president of peace to end this ugly war on Gaza, this aggression, Israeli aggression against innocent people from our point of view. So this is very important and encouraging, and also to talk about no annexation, to talk about developing Gaza where people will stay on their own land, and even those who left their homeland, they are entitled to return back. Those are very encouraging signals, of course, and messages.
Did everyone leave with a sense of unity about what the path is? And what is Egypt's role going to be in terms of the reconstruction?
Well, we have a unified Arab and Muslim position. We are in full support to the vision and the plan of President Trump to bring an end to this unjust war against innocent people in Gaza. For us, we have our plan. It's an Arab Muslim plan for early recovery and reconstructions of Gaza. And it's endorsed by the international community, including European Union, Japan, Norway, most African countries. And what next will be, as soon as we have a ceasefire, then we will move ahead with hosting an international conference in Cairo.
When will that be?
Yeah, well, as soon as we have a ceasefire. So we are talking about 2, 3, maximum 4 weeks from having a ceasefire to host it. And we will have 3 events. One will be dedicated for private sector, for talking about security arrangement in Gaza, governance of Gaza, who will govern
Blair,
Gaza.
The former prime minister?
No,
do you think he could be like the governor of this authority?
No. I mean, we are talking about Palestinian ownership. Of course, they have to govern themselves.
But what do you make of that idea that's being floated in the press?
Well, again, I'm talking about the Arab Islamic vision and the plan. We are talking about security arrangement. We are training, providing training of Palestinian policemen. We are accepting deployment of international forces within specific parameters. And above all, the governance of Gaza will be entrusted to a Palestinian administrative committee consists of 15 persons, all technocrats, all from Gaza Strip, and they will run Gaza for a transitional period of time till we manage to empower the Palestinian Authority to ensure the unity between Gaza and the West Bank.
And that was the Egyptian Foreign Minister Badr Abdulati speaking with Bloomberg's Anne-Marie Hordern. Now to some other stories that we're tracking for you today. Thailand and Cambodian troops have clashed in the border area of northeastern Thailand, exchanging gunfire and launching grenades. It's the first such conflict between their forces since they agreed to a U.S.-backed ceasefire back in July. Troops from both sides are now monitoring the situation, while Thailand's newly installed prime minister is expected to take steps to peacefully resolve the border dispute. New York City Mayor Eric Adams has ended his re-election bid. The announcement follows reports that Adams was entertaining potential job offers from the Trump administration and the private sector. That's in exchange for bowing out of the race to allow former New York Governor Andrew Cuomo to challenge Democratic nominee Zohran Mamdani directly.
Despite all we've achieved, I cannot continue my re-election campaign. The constant media speculation about my future and the campaign finance board's decision to withhold millions of dollars have undermined my ability to raise the funds needed for a serious campaign.
UK Prime Minister Keir Starmer has framed his political survival as his country's best hope of defeating populism. Starmer is trying to regain the faith of Britain's electorate amid complaints his government is not taking radical enough action on concerns such as cost of living and migration. In an interview with the BBC, Starmer drew political battle lines with Nigel Farage's Reform UK.
We have not had a proposition like reform in this country ever before. We've seen it in France and Germany and plenty of other countries. This is a different fight. It is a fight about who we are as a country. It goes to the soul of our future. It will be heard and the effects will be there for generations.
Taking another look at markets here this morning, we are just about 20 minutes into the session. You've got Leitner here. They're rallying this morning, or that stock is rallying after it reported some positive data from a weight loss drug trial. So that's one stock we can focus on here. They're actually looking at essentially ways to commercialise this in partnership, though, with companies that the company says are looking to make serious commitments. That stock there, rare earths as well, that's another focus for us today because there's two different things that Chinese authorities are looking at First, they want to have more exploration of rare earths and precious metals, but they also want greater utilization of those rare earths and precious metals as well. So essentially greater application of these to sectors like integrated circuits, AI, humanoids, the low altitude economy. So you're seeing most of these stocks moving to the upside. Macau casinos, that's another one to track as well, because we've got these expectations around how many people are going to be going to Macau over the Golden Week holiday. We've got reporting there's going to be 140,000 on a daily average. That's actually more than what they had last year. 150,000 rather. It was 140,000 last year.
Wow. Okay. So continue to see more when it comes to the Golden Week and what the expectations are that maybe a lot of people are heading to Macau for that 8 days. It's combined with a Mid-Autumn Festival, so it's going to be a longer 8-day holiday. So China will be shut for some time here. So certainly that's one thing to watch. I think 2.2 billion or so trips are expected.
Just a casual 2.2 billion.
Yeah, is going to be happening in those 8 days as well. In terms of your China dashboard, this is what it's looking like here today. Macau casinos are doing good. The rest of the markets are doing pretty well, but Hang Seng is doing a little bit better offshore than onshore here right now. And it's really the tech space that's really kind of driving things once again, right? Of course, we talk about Alibaba. That's certainly the big top performing stock there, just given Morgan Stanley just upgrading their price targets for the ADRs, talking about cloud, talking about all the like there. CGB yields are actually slightly lower as well, just given that we are seeing quite a bit more movement and momentum in the equity market now once again. And we're watching very closely what happens with dollar China. Quite a bit of strength there right now. We're at 712 levels for the currency.
Another stock we're watching as well is UBTech. That one actually is gaining really strongly. UBTech is one of the few ways that you can access the humanoid space in China in a public stock, and that's a company that's just reported more contracts for their industrial humanoid robots. So you're seeing that stock gaining as much as 4% today, but one of the hottest sectors we've seen in China.
Yeah, robotics, what was it, optical transceivers. I got my
all
vocabulary.
The corners of the market.
All the corners of the AI trade. Certainly one thing to watch, of course, as well. But yes, really, we're watching very closely. There's only 2 more trading days before that Golden Week holiday, so liquidity certainly is going to be a big thing to watch here in the next few sessions as well. As we count down, of course, we'll have PMI numbers, Golden Week numbers that come through here as well, and with that U.S. jobs report at the end of the week, that certainly is going to be a key thing for investors this week. Welcome back to the China Show. Here's a look at the HSI half hour into the session, and we are kicking off the last 2 days of the trading month on a pretty good note here right now. 2 days before we count down to that Golden Week holiday, of course, in China. So we're up about 1% here right now. We trimmed some of the gains, but still, we're talking about 1%. Not too shabby here on this Monday morning. And really, I think that industrial profit number was enough to really extend this rally once more.
Yeah, because I think it's telling investors the government's serious about curbing anti-involution, and maybe companies as well are starting to take notice of that. So you're perhaps seeing some early signs of it bearing fruit. But in terms of what's actually moving the most, it's still the tech story today. And we're talking about Alibaba in particular. You've been mentioning, of course, we've got that Morgan Stanley price target upgrade to $200 per share. They're very optimistic on the cloud story. They're very optimistic on the increased spending that we saw announced at their conference last week, their internal conference at Zara. But overall, it's a tech story today. We've been talking about how that's also been broadening. I mean, we don't often talk about optical transceivers, but we are today. I mean, they're an essential component for AI data centers, and we see Chinese providers that are really some of the biggest suppliers, not just into Chinese companies, but into big tech in the US as well. But that's the story there with Asia Tech. But let's take a look at Asia ex-China today as well, because it's not as positive, essentially. I mean, you're seeing that sort of decline there in the Nikkei. That's sort of dragging down the broader gauge. It's still holding on to some modest gains. But we had, a pretty good day on Wall Street on Friday.
Yeah.
And the PCE data really confirming these expectations around further easing to come.
Yeah, Taiwan is shut for a holiday, so maybe that's why we are seeing that absent here as well. But certainly, when it comes to the bond market, it's going to be all about that job support. And whether it does anything to shake up, it's almost like, non-wavering sort of conviction that the Fed's going to cut in October. Is there anything in the headline that's going to change that view? It's certainly quite telling. But then again, it all comes down to whether the government in the U.S. can actually avoid that shutdown as well. So that might actually risk the release of that data. So certainly that's one thing to watch. But yeah, as you mentioned, 149 for dollar yen right now, still seeing some strength when it comes to the currency there with dollar yen. It brings up really the week ahead and what's to come, right? So we talk about the jobs report. China PMI is going to be quite interesting as well because, what you saw in the industrial profit numbers is good. People say it's encouraging. You're starting to see a bit of reflation, the expectation that, profit margins are going to look a little bit better moving forward. But the demand picture still needs to hold up for the this picture to be more complete. So obviously the PMI numbers we'll look for that. Golden Week numbers that come out maybe at the end of next week. So certainly that's going to be the key thing to watch here. We talk about all these things like RBI decision as well. Also when it comes to Zijin Gold, that's the big one there. That listing that was delayed by a day. Supposed to be happening today, but now happening tomorrow because of that typhoon. That's certainly one to watch. And of course, we still have that LDP election, and then of course jobs report on Friday from the U.S.
Yeah, that's right. I'll just correct myself from the last hour. Zijin Gold was supposed to be today, and as you said, listing tomorrow. But a really, really big one when you take a look at Zijin Mining as well, the rally we've seen in that stock. But let's get more on what markets are looking out for. Bloomberg MLive strategist Mark Cranfield joins us now from Singapore. So, Mark, there's a lot. There's the China story, there's the US story. There's other data points as well to watch. What's going to be most important for you, do you think?
I think one of the interesting things you're seeing here with those Chinese tech stocks getting off to a good start this week, it's not just about still the AI narrative being positive, but in a way they're looking past the National Day holidays in China, and investors are saying to themselves, well, what if the US market goes up another 5% while we're on holiday? There'll be such a huge catch-up. It's an unusual scenario. Sometimes we go into this week of Chinese holidays in a very subdued mood. People just want to go quietly into the holiday. Maybe they shed a bit of exposure and the markets are a little bit run down. That's not the case at all this time around. Those industrial profits are certainly a good factor, but also I think people are concerned here. As we go into the fourth quarter, things are looking very positive across globally for markets here. You've got still the promise of the Federal Reserve lowering interest rates. Bond yields are certainly not threatening to derail anything. In fact, they may even go a bit lower if the jobs report is a soft one this week. And so by the time China comes back from its holidays by the middle of next week, it could find itself lagging behind the US market by quite a bit, particularly if the big tech stocks in America continue to do well. So you've got a self-reinforcing situation here, which is good for investors in Asia as much as it is for the rest of the world. So a different dynamic to what we've seen going into Chinese holidays than before.
Yeah, usually you see a bit of profit taking, as you say. It's interesting, too, when you take a look at the AI trade. There's a great story in the Bloomberg that talks about it's not really about the Mag 7 now. That's almost like a passé now. We're focusing on other sorts of names, like the likes of Oracle, Broadcom, the like, and all these different acronyms like the Fab 4, Big 6, Elite 8. Whatever you name it right now, right? But it seems like there's so many ways to slice and really dice this AI trade still, Mark.
Well, I think if you're an aggressive equity trader, you've already decided that the Mag 7 is interesting, but is not the main story this year especially. You've already moved on to some of those other names like the Oracles, the Broadcoms, those kind of people. They've been, Palantir have been producing much better numbers in terms of the market moves. It doesn't mean to say that people are giving up on companies like Apple or Microsoft, those kind of people, if they continue to produce very good profits. And this earnings season, which is coming up, will start soon in October. It's probably going to be another decent earnings season because we're still in the build-up phase of AI related. So even those Magnificent Seven companies who maybe are not as much in vogue as they were, but they're still likely to produce very decent profits when they announce in the coming few weeks. On top of that, you've also got the added momentum of some relatively new names or some old companies like Oracle who come back into play because of the data centers and other issues. So it's really, you've got them feeding on one another. And if anything now, instead of having a Mac 7, now we have a Mac 12 or Mac 13. There's several big companies in the US, but also in the rest of the world, who are feeding into this as well. For the moment, nobody wants to call a top. Maybe things are beginning to look a little bit like a bubble, but it could be quite a way to go before people say, hey, this is enough, and we don't want to take it any further. And it may well run into year end.
That's what I want to ask about as well. I mean, you're saying that we're setting up for a rally into year end. What is that going to look like? And then what else are you watching this week as well? Because we've got the Tankan survey as well. You've been writing about the dollar yen and where it trades from here too.
Yeah, I think if you take Japan, this Tankan report, it really only needs to be in line. It just needs to meet expectations, and that's probably the last thing the Bank of Japan need to know so they can successfully go ahead and raise interest rates in October. The thing is, though, if you look at under Governor Ueda, he's increased interest rates a few times, but the distance between each one has been pretty big, several months. The last one we had was in the early part of this year. By the time we get to one in October, if we get that, it's a huge gap between the rate hikes. So nobody's expecting that the Bank of Japan will be doing successive hikes. It could be another 6 months before we get the next one. So the Japanese markets can absorb that pretty easily. They would have priced it in by now anyway. More interesting probably is that we see a bit of flattening in the JGB curve as people are less concerned about issuance at the very long end of the curve. So even Japan is not really going to be a drag on the global markets. The biggest threat really to the whole good mood in markets really is geopolitics. If something goes wrong in terms of the trade wars, if China and the US are no longer friendly to each other, they've got this truce for the time being, they keep on talking more about reducing tariffs from each side, working together. As long as that theme holds true, then it's generally very good news for financial markets. If the US and China fall out, all bets are off. We could get a repeat of Liberation Day back in April, but that is not the base scenario that most people are expecting in the next few months.
This jobs report from the US, Mark, how important is it this week?
It's a big deal, but it's really just a knee-jerk reaction as much as anything. Even if the numbers are better than expected, people will probably only trade it for a couple of hours. The underlying picture has been consistently shown to be a weakening US employment situation. We had very big revisions to the numbers for the last 12 months. Fed people are showing caution towards it. They're showing concern that the jobs market is already cooling down. So the bigger picture is that the Fed are ready to lower interest rates again. This number this week will just be seen as a one-off number. That's not going to derail them from wanting to lower interest rates. Really, the only thing it would tell you about is really for 2026. If we get a series of good job numbers, it could slow down the rate cuts for next year. This year is probably pretty much cast in stone. We are going to get lower interest rates. That's almost a given, and it'll be very surprising if this jobs number pushes back against that.
Mark, thank you. Mark Cranfield there, kicking off the week with us. MLive strategist joining us from Singapore. Coming up, we have more details on President Trump's deal to sell TikTok, with sources saying its Chinese parent company will likely get about half of the profits from the U.S. operations. That scoop is next. This is The China Show. All right, let's focus a bit on geopolitics right now. The Wall Street Journal is reporting saying that Beijing is seeking a significant concession from the Trump administration when it comes to Taiwan. It wants Trump to officially oppose Taiwan independence. Let's bring in our chief North Asia correspondent, Stephen Ingles. He's here right now. What now, as both sides really try to line up a meeting next month between Trump and Xi?
Yeah, it's a big ask. This is indeed what Beijing is pushing for, and they probably are, because we do know back in 2023 when Xi met Biden on the sidelines of APEC then in San Francisco, there was wide reporting that Xi Jinping did ask the Biden administration to go along those same lines, and that is essentially be more definitive rather than the longstanding U.S. policy of strategic ambiguity under the umbrella of the Taiwan Relations Act on how it views Taiwan and the one China policy. The U.S. acknowledges the one China policy. It does not, though, fully endorse Beijing's view of the one China policy. The status quo is kind of how it's always been. Strategic ambiguity is another way they've often referred to it. Now, what Beijing tried to get the Biden administration and previous administration to do is to come out and essentially, which would sort of change not only the semantics but the tone of U.S. intent, and that is to change their wording, where right now they do not support independence. That's the wording from the State Department. Beijing wants the U.S. to kind of, and Donald Trump in particular, to oppose the efforts by President Lai Ching-te and his push for independence, even though, of course, Lai Ching-te has not stated that they are pushing for independence. They are essentially already de facto independent, right? So again, it's semantics, yes, but this would be a seismic shift in U.S. tone from neutral to aligning more with what Beijing sees as a red line issue.
Yeah, it would be really significant, and I think it's also really important when you think about that sort of unofficial deadline that people talk about, 2027 being the year that China wants to be ready to launch an invasion against Taiwan. So this story maybe will continue to get more traction. But how realistic is it for them to ask this, do you think, from Beijing? Because as you said, they've asked this in the past and they haven't got what they wanted.
I think it's very realistic that they will ask. How realistic will it happen? That's a short amount of time between now and when they're supposed to meet Xi and Trump on the sidelines of APEC. And it is a huge ask. And the wild card here is Donald Trump. We simply do not know if that is something that is Taiwan on the table. Yeah. That's the ultimate question. And that would be a very big issue, I think, in the Western Pacific and the geopolitical dynamic in this part of the world. If that was one of the concessions that the United States might be able to give to Beijing to reach a trade deal, to reach a rapprochement, if you will, with Beijing, if there were other trade-offs, that would be a massive one.
This is coming at a time when the U.S. and the Taiwan relationship has been a bit unstable, I guess you could say. I mean, obviously,
the U.S.-Taiwan relationship?
Yes. I mean, it seems like they've been delaying military aid, the like, that was alleging to a trip that was basically removed and canceled because, you know, the U.S. remains to be unwilling to comment on the whole situation.
Well, Trump, no doubt, wants to have a meeting with Xi Jinping. He wants to have face-to-face. He wants to go to Beijing, as the White House has said, in the early part of 2026. He has to give the impression that he is taking a bit of a harder line stance. And if even the possibility that this change of verbiage on Taiwan is a possibility, Beijing will continue to engage, no doubt. If they're more conciliatory and sell arms to Taiwan and also welcome Lai Ching-te to the White House, all those bets are off.
Yeah. Really wanted to watch very closely, but I mean, deterrence has just been such a fundamental aspect to U.S. strategy in this region. But that was our chief North Asia correspondent there, Stephen Engel. And of course, President Trump, he's a deals man. And the key one that we're watching is TikTok. And what Bloomberg's learned about that and the fate of TikTok in the U.S. is that Bytedance, which is the Chinese parent, is likely going to be receiving about 50% of the profit from the platform's U.S. operations. That's even after it sells its majority ownership to American investors. So for more on this scoop, let's bring in our tech reporter, Newly Purnell, who joins us. So, Newly, this sort of seems to be quite favorable for Bytedance right now.
Yeah, I'd say so. You know, this seems to be the deal that people have been talking about forever that's never really come through. And there's the fate of TikTok and its 170 million users in the U.S. has sort of been up in the air, but yeah, an interesting twist. It seems like it would be a pretty good deal for Beijing, in which they would get money for the sale and then also share in future revenues for its operations. So, of course, we have to keep in mind is that Beijing hasn't commented on this, and they would need to assent to the deal. So far, it's a lot of U.S. officials talking about it, J.D. Vance and others. We'll have to wait and see. But yeah, it seemed to be a pretty favorable deal for Beijing if it happens.
The price tag was a bit confusing, though,
right?
From J.D. Vance.
Right. I think he referenced $14 billion, which people were sort of scratching their heads, thinking that's below the upwards of $40 billion we'd heard as a potential valuation. But if you consider that would be the price tag for the sale, but then also they would receive revenues in this profit sharing, that might make sense.
What about Oracle's role in this as well? Because that's sort of been one of the big unknowns. Exactly how are they going to be managing this technology? How are they keeping it independent? What do we know about how that's progressing too?
Right. Of course, they're said to be one of the parties that's bidding to take it over, along with Silver Lake and others. And some critics have said, well, of course, they took responsibility for handling U.S. users' data under this arrangement called Project Texas. And some critics have said, well, if this deal comes to fruition, it really would be sort of Project Texas 2.0, or as one critic said, Project Texas with a fresh coat of paint. Some people say, well, really, this doesn't go far enough, because if Beijing would still have a board seat in some new entity, and the user data would continue to be managed by Oracle, and that if the new entities would be able to oversee the algorithm, it's so complicated, would they really be able to have independence? Is this really just what we've got now on steroids?
Yeah, so then, because you mentioned earlier about we've got to get that sign-off from China, what about the sign-off from the U.S. as well?
Right. Remains to be seen. I think it's one of the questions that we don't know, how this infrastructure might work. But yeah, lots of questions still up in the air. One thing that's interesting to me as I review all of this again is just how influential, TikTok is in the U.S. I said 170 million users. That's one out of every two people in America, and 2/3 of people under the age of 30 are regular TikTok users. So hugely valuable. One of the reasons that people have criticized it being in Beijing's hands is that we don't know how the algorithm works and how it's serving content to young people in America. Trump has said it's been really important in his election. So just another reminder for me personally, just how important this platform is and what's in the balance here as we talk about what's going to happen next.
It's really kind of emerged as a big negotiating tool in the whole U.S.-China thing, which maybe a year or two ago it wasn't. It just kept kicking the can down the road. Newly, thank you so much. Newly Purnell there, our Bloomberg tech reporter here in our Hong Kong studios. We've got plenty more ahead. This is Bloomberg.
Welcome back to the China Show. Well, we are nearly an hour into the session, and really there's a standout today, and that's A-shares. We're seeing Hong Kong markets doing well. They're actually outpacing what we're seeing in mainland A-shares as well. But it is that sort of story we're getting around, is China really becoming investable once again? Uninvestable was sort of the tag back in 2021, but it does seem like the narrative is pretty sizably shifting now.
It brings me back to this conversation we had during our subscriber event last week with Shuli Ren, saying, how did China go from uninvestable to irresistible, right?
I love that.
And a lot of it has to do with the whole theme of self-sufficiency, right? This whole AI innovation, the breakthroughs that we're seeing. First it was DeepSeek, and now you're seeing that second wave of it when it comes to Alibaba and the like. And she says, look, AI can actually be still, competitive against the U.S. if China stays practical, right? When they don't need the most high-end chips. They can use what they have now and still be able to come through with a lot of innovation and technology, and that's really kind of the narrative.
That's sort of interesting as well, because I think a long time the story around China was that, yes, they had AI, but they didn't have access to that high-end technology. But now we're hearing more and more breakthroughs in terms of their semiconductors that have specific use cases. And also, we've been talking about optical transceivers this morning, but an essential part of AI data centers, and how Chinese companies, again, they are so prevalent in that, not just for Chinese data centers or cloud providers, but also for the hyperscalers over in the US. So it's sort of a broadening out of the rally and a reappreciation that China actually controls a lot more of the supply chain than many people really thought about initially.
Yeah, and there's now a bit of I guess you could say, a FOMO sort of aspect to it. People saying that there's a fear of missing out of this rally, and can you still chase it is certainly one thing. But you're starting to see when it comes to foreign inflows and the interest back into this market that we haven't seen since 2021, and that was when we heard the whole uninvestable tag.
Yeah, I think we've got a terminal chart on this actually, but it shows the iShares China ETF, and you're starting to see fund flows into that really picking up, and it's coming at the expense. We're talking about this with Gareth Nicholson from Nomura, for instance. Money's flowing out of, say, India, that was such an investor darling in 2024, back into Chinese equities, because you see the ex-China ETF, that's the line in blue, and that's trending down. So as investors go back into China, where are they taking their money from? And as well, you've been discussing this morning, I mean, maybe we're not talking so much about the Mag 7 anymore because you've got so many different acronyms that are being thrown around, so many different numbers. Is it 4? Is it 8? Is it 12?
Yeah.
The point is that the sort of the shine seems to have come off the Mag 7 as we know it just a little bit.
Yeah. Is the Mag 7 still the best representation in terms of AI, right? That's the lingering question here. But you could say that when it comes to China, too, right? There's so many sort of themes and names, as you say, optical transceivers that we can look into. Even CATL even has a bit of an AI flair to it now as well. So certainly that's why, you're starting to see the thematic sort of investing very much gaining momentum in China. And maybe that's what continues. But that industrial profit number, I have to say again, is another confidence boost for this market that perhaps, all this policy towards, anti-involution is starting to actually have some traction now. And it is going to improve maybe profit margins moving forward.
And I think it's interesting, actually, when you sort of contrast, and we can get into the movers now, but it's sort of like that strength and that resilience you see in the Chinese economy against the US, for instance, in the trade war. You're actually seeing sort of concerns building, and that's why you're going back into havens like gold, for instance. It's rising again this morning, touching a record, but it is that haven demand. You've got those US shutdown concerns, and that's really feeding into the narrative around that. But you can take a look at how gold is trending today. Again, going back to what Gareth Nicholson was saying from Nomura, he's very optimistic on silver, and he's saying that the chase is on going back to the 2011 peak for that.
Yeah, I think silver's kind of doing a catch-up story with what's been going on with gold, and we continue to see that. So, yeah, it's crazy to think, right, when you have equity markets that are hitting all these milestones and gold is still at a record, right? What does this tell you about, really, the state of things here? Energy stocks certainly in focus as well, given what we saw with oil prices. We did see that drop earlier in the session here on the back of signs that potentially OPEC Plus might be looking to boost output once again. There you go. You're seeing, actually, the energy space look pretty good right now in the region here. PetroChina's up 1.5%. S-Oil in Seoul is up some 4% here right now. And we're watching the EV supply chain as well, or even just the EV side of things here, just given some of these export rules that came out from Chinese regulators last week.
Yeah, this one I find super interesting. So from January 1, automakers are going to need permits to export EVs. It sort of brings it in line with what you see with other autos, motorbikes as well. But you are just seeing a mixed reaction to that stock, so generally moving higher like we see for Hong Kong across the board.
11:29 a.m. in Tokyo. Japanese markets are heading to that lunch break here in a moment, and we are continuing to see some downside when it comes to Japanese shares. We're down about 1%. Topics is down close to 2% here right now. The strength of the currency could be one factor here. We're getting closer to 148, 149 levels for dollar yen. So some strength there. But certainly one thing to watch is also that Sony Financial Group, that first day of listing there, we are seeing initially was about 30% above that reference price as well. So certainly that's one thing to watch here today. Asia Pacific, though, is doing a little bit better. Japan's dragging things, but you are seeing Hong Kong have quite a bit of momentum behind this rally now.
Yeah, and in Hong Kong, it's really the tech story because you're seeing, for instance, Alibaba really leading the gains today, but you've got other names in the green as well, like Kuaishou, for instance. Again, that's sort of that AI story. Otherwise, I mean, the story around stocks is also just what we had on the Friday session in the US, optimism there. We had the preferred inflation gauge coming out for the Fed, pretty much in line with expectations. So telling us that that bet around Fed easing is still very much intact. But of course, we are coming up into the Golden Week holiday. It's going to be a really big one to track just off the back of any sort of consumption data we get and what do we learn about how consumers are faring in the mainland markets. That is going to be really a key theme for us to be tracking. It also comes, of course, you've got millions of people set to be traveling. You've got shops dining during the period. Of course, this whole thing kicks off on Wednesday of this week. But perceptions are really starting to shift when it comes to brand China. So let's get more of our China correspondent, Min Min Lo, here to explain exactly what we mean by that.
Yeah, we're talking about this because this year we've been starting to see a noticeable, a slow but gradual, a slow but significant shift to favorability towards China. So you can see on this chart is done by Morning Consult. It's a survey in the first half of the year. And you can see the orange line here. The favorability towards China has been increasing while the favorability towards the US has been declining. And this coincides with similar results that we got from Pew Research as well. And you flip the board, you can see that Pew Research also found that among Americans, you can see that those who have a very unfavorable opinion of China has declined by about 10 percentage points on year. And over here, those who feel that China is an enemy of the US has also declined quite significantly. Now, of course, there could be many reasons for this. It could be because of policies out of the US, confidence in President Trump and US leadership, and perhaps because China has been one of the few countries that has been standing up to those terrorists. But at the same time, it's undeniable that this year has seen a huge, influx of Chinese brands that really made waves globally. You think about Pop Mart, those designer toys, and you can see artificial intelligence, electric vehicles, Lao Go, one of the homegrown luxury brands that really has been gaining traction this year, and Sea Beauty. Take a look at that picture there. There are many of these brands that use the Chinese motifs that are, really part of the packaging. And gone are the days when Chinese brands used to want to try to remain incognito. Now, many brands are really proudly declaring their Chinese roots. And the question now is whether or not Chinese soft power has the breadth and the depth of brands in Korea and Japan, for example, because you think of those two countries and you think about, Japanese sushi, you think about anime and manga, K-pop and, K-dramas. They've been getting widespread reception globally. But if you look at Nurja, for example, it's been doing really well domestically, but then overseas really makes reception. So the question is whether or not China will eventually be able to have the longevity that brands like Disney has, or become synonymous with the quality and intricate designs that Japanese brands have.
All right, very interesting. Min, thank you, Min Lo there, our China correspondent, on really what this whole soft power story is. Not just about Labubus, as you say, right? It's also when it comes to Shein fashion brands. It's about TikTok, for example, gaming, which certainly has been making waves overseas as well. Joining us now is Siew Ting Foo, author of Building Brands with Soul. She has served in brands and marketing roles at multinational firms, including the likes of HP, Unilever, and Diageo. Ting Foo, it's really great to have you on. I mean, our correspondent Min Lo kind of highlighted, right, all these sort of emerging trends that we're seeing among the consumer space, and really kind of making these soft brands very cool. Why do you think there is this kind of, Chinese brands are actually now cool? What's driving that?
Hi, Annabelle. Hi, Yvonne. Thanks for having me here. I think this is just driven from this whole entire pivotal moment that we're really facing, where, Chinese brand is really going on outbound, and I call it in the Chinese terms Chuhai. And in the work that I did in terms of the research, I've been actually observing a couple of different models, and the one most significant model, which is what I term it as Chuhai with soul. And what does this mean? This primarily means Chinese brands are really looking at what they're really good at, which is all about innovation and speed. And they're coupling with the Western brands discipline, which is bringing in purpose-driven strategies, cultural intelligence, and emotional story to really drive sustainable growth.
I am curious, though, because
and some great examples. Yes.
Continue.
Yeah, some great examples that I'm seeing is, the brands of the like of Labubu, Pop Mart, who has really, capitalized on the ugly, cute phenomenon. And even in brands, that we see like Haier, they're really innovating and actually understanding cultural codes and product trends. And even brands like Anta, they're actually adopting, nuances into the different cultural relevance to make the brands cool.
I am curious about Labubu in particular, just being an example of that Chuhai with soul that you talk about. We have seen, we've seen the prices at least sink for those in the secondary market, but also this sort of speculative mania around them starting to cool as well. So how long-lasting can it actually be?
Well, I think their success has been driven from a really intuitive cultural human insight. They really capitalize on this whole phenomenon about ugly and cute in itself. But having said that, they're also starting to adopt this trend and actually capitalizing on new emerging trends, like their recent collaboration with luxury brands like the French luxury brands Mona, And the whole collaboration is starting to start the next wave of innovation and taking the brand even further. I believe that this trend of innovating and cultural choreography will continue to drive the momentum.
Yeah, tell us a little more about the cultural choreography, right? I mean, as we're talking about the Alpo Gold, where heritage gold is sort of a key theme, where they're not trying to mask the fact that this is a Chinese brand anymore. They're actually proud of it, embracing it. Do you think what do you think is behind that sort of cultural, emotional sort of consumption theme now?
Well, I think given what we're facing globally, whether you are in parts of Asia or in the parts of Western worlds, you're really looking. I mean, the Gen Z are really looking at brands that can really connect with them and actually authentic and really build trust. I think the trick which I really articulated in my book on building brands with soul is to really find and understanding the cultural intelligence and really look at the human tension and really disrupt that in the cultural fluency. I mean, the models that you have in China might not totally work when you're too high. So the trick is, how do you marry the local cultural nuances and you take it to the next level? I think a great example through the work that I did is, the Anta brand. They recently, take the brand into the US. They launched it in Beverly Hills in the whole fixed stores, and they actually work with Kyrie Irving, their brand ambassador, to bring the brand alive. But on top of that, they started nuancing and bringing in collaboration, and they started working with Luckin Coffee to bring in a great collaboration, and hence making the brand cool and also connects to the heart of the young consumers in a slightly different way. So for me, this is what I talk about in my fourth model, which is combining the innovation of what China brands are really good at, but really bringing in together the purpose-driven strategies to drive differentiation.
You talk about authenticity. I think one of the concerns, though, when you have a brand that's trying to build those authentic connections with customers abroad, and I think about, say, Black Myth Wukong, for instance, China's first AAA game that was an absolute blockbuster success last year. But even with that, on the international stage, you still saw concerns around censorship, for instance, and you had a company affiliated with the developer, for instance, that was allegedly asking overseas player to avoid discussing certain topics that were sensitive in China. So how do you have that kind of concern around censorship in the mainland when you're also trying to export that model abroad?
I think there's no one perfect answer, but I would really think that the new model that I've seen, being really true to what your brand stands for, but having that agility and that nimble adaptability to bring your brand values in a way that connect locally is what I think is a real model around that, to really redefine the value. And given this whole phenomenon of Chinese brand going global or too high, I'm starting to see that the Chinese brand is starting to make their brand cool. They actually have their own heritage, but they're yet adopting new things, and with their speed, agility, and this whole mindset of entrepreneurship, I think the Western brands should start, sitting up and watch out for what's coming.
What do you see as some of these challenges for some of these Chinese brands going abroad? Obviously, when it comes to Labubus, I think of one example is the protection of IP. You see a lot of copies out there and the like. But what do you see as some of the big risks out there for some of these Chinese brands expanding internationally?
I think the need of not resting on the laurels in that perspective. The need to really understand who their target audience is. And to really adapt and actually really going back to what I mentioned, the cultural fluency, the cultural intelligence becomes really important. And given in the world that we live in now, the ability to adapt, win the consumers and the hearts and minds of consumers becomes really important.
Siew Ting, thanks so much for joining us there. That was Siew Ting Foo, author of Building Brands with Soul, joining us this morning from Singapore. And if you're a subscriber and you want to re-watch that interview, you can via our interactive TV function, TV Go. You can also become part of the conversation by sending us instant messages. So do check it out at TV Go. But as we go to break here, just taking a look at how Chinese markets are faring today. And you can see, again, that outperformance of what's happening in Hong Kong this morning. So certainly being led by the tech story, and that's also really being driven by Alibaba and that price target upgrade we got from Morgan Stanley, but investors really still liking that broader AI theme. We'll have plenty more ahead. This is Bloomberg.
Checking Chinese markets here right now, and yeah, Hong Kong is doing good as we kick off this trading week, and of course as we wrap up September. And there you go, we're up 1.5%. HS Tech is what's driving it. We're up some 2% right now. And as Mark Cranfield mentioned from MLive, right, it's actually quite unusual to see this amount of sort of excitement as we get closer to that Golden Week holiday. Usually trading is pretty subdued. People are maybe taking some profits and the like. That seemed to be last week's sort of story when it comes to the Hong Kong story. Right now we are seeing continued gains here when it comes to Hong Kong. Shanghai, it's pretty much flat, but CSI 300 now is inching a bit higher here. We're up about 0.6%.
Yeah, and we're going to also shift across to what's going to be a really big meeting, because we've got President Trump who's set to meet with the Israeli Prime Minister Benjamin Netanyahu for the fourth time since he took office back in January of this year. But essentially, you've got the US president saying that an ambitious plan to end the war in Gaza is nearly complete. And we also spoke with Egypt's foreign minister, who says that Arab states are in full support of President Trump's push to end the Israel-Hamas war in Gaza. We spoke to Badia Abdulati, who also told us about the outcome of last week's meeting between Trump and officials from Arab and Muslim-majority states.
It was a very, very encouraging meeting. It was positive, to hear from President Trump his commitment as a president of peace to end this ugly war on Gaza, this aggression, Israeli aggression against innocent people from our point of view. So this is very important and encouraging, and also to talk about no annexation, to talk about developing Gaza where people will stay on their own land, and even those who left their homeland, they are entitled to return back. Those are very encouraging signals, of course, and messages.
Did everyone leave with a sense of unity about what the path is? And what is Egypt's role going to be in terms of the reconstruction?
Well, we have a unified Arab and Muslim position. We are in full support to the vision and the plan of President Trump to bring an end to this unjust war against innocent people in Gaza. For us, we have our plan. It's an Arab-Muslim plan for early recovery and reconstructions of Gaza, and it's endorsed by the international community, including European Union, Japan, Norway, most African countries. And what next will be, as soon as we have a ceasefire, then we will move ahead with hosting an international conference in Cairo.
When will that be?
Yeah, well, as soon as we have a ceasefire. So we are talking about 2, 3, maximum 4 weeks from having a ceasefire to host it. And we will have 3 events. One will be dedicated for private sector, for talking about security arrangement in Gaza, governance of Gaza, who will govern
Blair,
Gaza.
The former prime minister, do you think he could be like the governor of this authority?
No. I mean, we are talking about Palestinian ownership. Of course, they have to govern themselves.
But what do you make of that idea that's being floated in the press?
Well, again, I'm talking about the Arab Islamic vision and the plan. We are talking about security arrangement. We are training, providing training of Palestinian policemen. We are accepting deployment of international forces within specific parameters. And above all, the governance of Gaza will be entrusted to a Palestinian administrative committee consists of 15 persons, all technocrats, all from Gaza Strip, and they will run Gaza for a transitional period of time till we manage to empower the Palestinian Authority to ensure the unity between Gaza and the West Bank.
That was the Egyptian Foreign Minister Badr Abdulhadi there speaking with Bloomberg's Anne-Marie Hordern. Now to some other political stories that we're following for you today. Thai and Cambodian troops have clashed in the border area of northeastern Thailand, exchanging gunfire and launching grenades. It's the first such conflict between their forces since they agreed to a U.S.-backed ceasefire in late July. Troops on both sides are now monitoring the situation, while Thailand's newly installed prime minister is expected to take steps to peacefully resolve the border dispute. New York City Mayor Eric Adams has ended his re-election bid. The announcement follows reports that Adams was entertaining potential job offers from the Trump administration and the private sector. That's in exchange for bowing out of the race to allow former New York Governor Andrew Cuomo to challenge Democratic nominee Zohran Mamdani directly.
Despite all we've achieved, I cannot continue my re-election campaign. The constant media speculation about my future and the campaign finance board's decision to withhold millions of dollars have undermined my ability to raise the funds needed for a serious campaign.
UK Prime Minister Keir Starmer has framed his political survival as his country's best hope of defeating populism. Starmer is trying to regain the faith of Britain's electorate amid complaints his government is not taking radical enough action on concerns such as cost of living and migration. In an interview with the BBC, Starmer drew political battle lines with Nigel Farage's Reform UK.
We have not had a proposition like Reform in this country ever before. We've seen it in France and Germany and plenty of other countries. This is a different fight. It is a fight about who we are as a country. It goes to the soul of our future. It will be heard and the effects will be there for generations.
I got plenty more ahead. This is Bloomberg. All right, in terms of what to watch this week, there's plenty on tap here, obviously, when it comes to China PMIs. That's the next thing, of course, after we had those very bumper industrial production numbers over the weekend as well. So that happens on Tuesday. You have the U.S. jobs data. That's to be the key one for the bond market here, really. And now that, it seems like it's a near certainty that the Fed's going to cut based on market pricing. We'll see if this data changes anything in any way, right? That comes out on Friday as well. Of course, we're watching RBI, RBA. And I think tomorrow is going to be the big one for us, not just with the PMI numbers, but also that Zijin Gold Hong Kong listing.
Exactly, yeah. I mean, we had that delayed by a day due to the typhoon last week, but it's certainly been an interesting name, particularly when you've seen that huge run-up in parent company Zijin Mining as well over the past few weeks.
Yeah, and certainly it's the perfect timing, right? I mean, take a look at gold prices here right now. We've hit another record. Take a look at precious metals in general, right? You have gold, silver, and palladium, all of which are rallying here this morning. We're at close to 37.90 when it comes to gold. Silver is up about 0.8%, and really playing a lot of that catch up. But palladium is also doing very, very well here today. We're up some 2% for that spot price as well. So yes, this on the backdrop of equities that still do quite well. Especially we're watching some of these gold miners in China too right now.
Yeah, it's an interesting one. I think it also comes against that backdrop of other big events this week, and it's certainly that looming U.S. shutdown risk as well, and how that's sort of factoring into the equation. Does that delay the jobs report figures as well? But this is the gold miners in China, and again, as you say, we're seeing some gains here across the board. Another stock or group of stocks that we're watching here this morning is the Chinese semiconductor names or semiconductor-linked stocks, because we've got more threads that companies received approval from the Shanghai Stock Exchange for its IPO on the STAR market. The company's looking to issue no less than nearly 45 million shares, about 8 billion yuan of the IPO proceeds to be used in next-generation projects. So they're looking essentially to become a competitive GPU leader, and we're certainly seeing that real reappreciation as we've been discussing around the semiconductor space in China and the capabilities of it.
Yeah, certainly one to watch there. Hangzhou CNCR up some 20% here right now. Another one we're watching is New World Development. So at first we were falling as much as 11%. here, we've trimmed a lot of those losses here right now. We're just down about 1%, perhaps just given the enthusiasm we're seeing overall in Hong Kong here today. That's actually helping the likes of New World. But this is after we saw the developer reported another full year of losses here. And really, people are now talking about a lot of concerns really about whether rising leverage risk, just given that they continue to suffer these losses here as well.
Yeah, I think they've got more than 200 billion Hong Kong dollars in liabilities. It's been a very costly mistake and misstep of the former CEO, Adrian Cheng, his 11 Skies project, which was a huge mall tied to Hong Kong's airport. But certainly that stock has been under pressure. Let's also take a look, though, at what's moving to the upside today and what's driving this rally. And as we said, it's still that tech story in China here. If you take a look at the biggest movers in the tech space, it's certainly been Alibaba. You can see Kuaishou there, SenseTime, Baidu, Bilibili. I mean, these are all names that are benefiting from that AI theme in China.
Yeah, the only ones that are not moving are NIO, XPeng, and Xiaomi, some of these EV makers, potentially maybe some of those new rules from the government there when it comes to exports might be really hitting that. We have plenty more to come. Insight is next.